What's going on, traders? Welcome to the channel. I'm John. That's Groot. Ooh, that's nice. We trade options here. All right, we are talking about setting up the entry portion of the wheel strategy. So I'm going to go over that. Just a heads up, I do have a bigger video explaining the strategy in total coming out, but that's going to take some time to work on. It's going to be a really great video that you will not want to miss. Excellent income source with this strategy. But we're going to start the first part of that. So I got a couple things to talk about and explain to you here, and let's dive in. So basically the thesis here is, man, the market is just rip roaring higher. It is insane, but this does bode well for Bitcoin. So Bitcoin's looking pretty good. If we go here, you're going to see we're hitting the consolidation pattern again, right around that, this is in market cap, so that's kind of nice to see. But you're just seeing this consolidation. I think Bitcoin's at like $35,000 there, so that's not too bad. But bottom line is Mara and Riot very bullish. I'm looking at that over the next coming weeks to months, and you can see this uptrend already building up. Actually, that's in Mara. Let's go to Riot. You're going to see almost a very similar chart pattern, so I like that. They seem to trade in tandem. But the other extremely bullish catalyst is with the China crackdown on Bitcoin miners. We've got less players involved, so that means more profits for the rest of the miners, and Mara and Riot are big players in this space. So Bitcoin's back on the table, boys. So a couple things I want to talk to you here. I have a covered call in Mara, looking good in terms of profits, and also on top of that, I bought my 1AMC 0.25 share today. So I don't know, let's do another one. It's down, so I'll have to buy into that again today, so 11.24. But let me show you the setup here for the Mara covered call. So this is the one right here that I sold. It is time to close out. Basically $127, $128 in profit, 52% gain there, and about a week or so in trade. So let's close this puppy out here, and I will set up that. We'll get that closed, and I want to talk about a few other things, namely the AMC spread setup I did yesterday. It is not doing well. Losing money. It's only been one day, but I did allow myself the small position sizing. That way, if I want to add more to it, I can and average down, or if I feel, not so great about it, then I leave it there. I'm gonna give it a few hours, maybe to tomorrow, to decide. But if I do, I end up going maybe more towards at the money. So this spread would be something along the lines of like the 45, 50 calls for that call debit spread, but we will see. Now, I want to talk to you about the next part of this where I set up the wheel strategy, and that's on Tastyworks. Let's go to it. I'll show you the setup here. And what this is in Mara. So I know this can be kind of confusing. It's like, wait, what's going on? But bottom line, here's what it is. The first step one is a bullish setup in the stock, and what you do here is what is called a cash secured put. So what I'm doing is at this 28 strike, I decided to sell a put at that strike, meaning it is a bullish play. I'm expecting it to either stay where it's at or go higher, and if so, I pocket all the premium. And what is happening, there's 9 days remaining on contract. This is cash secured, meaning that what I'm doing, this is really key here, if we go lower and I end up getting to a point where I am tested on this trade, maybe it's in the negatives, maybe it's a full loser, well, what ends up happening is instead of me taking like the loss itself, it's kind of a paper loss. And what that means is I end up buying the shares basically at the 28 strike. So they assign me 100 shares at the 28 strike. So what this does in this trade is you require 100 times that strike in terms of value in the account. So $2,800 is cash secured to sell this put. So that's kind of the way to explain that. And if I go into Mara, basically the option chain here, puts are on the right, calls are on the left. What I end up doing is I will sell a put at whatever strike I feel good about. As an example, this was at the 28. I think Mara's trading like 28.50, 28.44. So I ended up hitting the bid so I could sell that contract. And then what happens at that point is it will say you have the obligation to purchase this if if we get to that point, so we're putting this money aside, and what'll happen is you say, okay, we're good to go, let's do it. And now my goal is to collect most of this premium here, this $131 collected over 9 days. So not too bad. It's about a 5% return on risk there, which is not bad. I love it when I see ones that are about 10 or 20% return on risk. However, that's usually kind of hard. You need the right market environment. And since I'm not very bullish on the market, I don't want to take the risk on something like a smaller price stock like BlackBerry or something like that that has really high premiums, because it does kind of come with the risks. So since I am a little bit more bullish on Mara and Riot, I'm willing to take this risk and go with it. And you can see it's working out fine right now. But even if it doesn't, even if this goes against me and say Mara goes lower to like $24, $25 a share, well, it'll just assign me the shares. And then what will happen is as you get these ebbs and flows in the market, then that will move higher. So you can see how Mara jumps higher and lower. So let's say it goes back to 24 or 20. Well, it's gone there before, and I'm just holding on to shares and I'm selling premium lower and lower and lower so that it reduces my cost basis. That's the gist of the trade, the setup.